Welcome, everybody. This is Dr. Terrence Duncan with Mahogany Thoughts, and I'm with the co-host Terrence Butler and Carmel Brown, Queen Carmel. She is actually out and about right now. She's actually has some responsibilities checking her son out. Looks like that she sent a text message and said that they won 14-8 in his baseball game. So congratulations to him. So hopefully she'll be able to join. Today is April the 27th. And Butler, man, what's going on with you?
Oh man, chilling. Son had his first track meet today.
How do you do?
He was running 800. He came in fourth. About 10 runners or so. No, he came in third. They said he came in third. So first race. So I was kind of impressed with him. So he was doing this thing.
Absolutely.
So it was a good time. I haven't been to a track meeting in years, so it was cool watching them out there.
So have you ever, did you do track? I know you used to hoop, but did you used to do track?
No, I hated running. I still hate running. I hate to run. I think it's boring. It's just like you just running. I'd rather go hoop or something to get some cardio in.
See, I kind of take offense to that because I like, actually, you know what, running is kind of boring, because it's like, it's just you and you're just staring at other people. But you know what, though, mentally, though, it's kind of like, it's different. Yeah, it's kind of different, compared to hooping and stuff, because hooping it's like constantly in your face. You always got to be in a particular position or whatnot and stuff. Track, I don't know, I just like to be the fastest cat on the field. So.
Well, track itself is cool. Like if you're running against somebody,
yeah,
I can see that fun, but not like running by myself. After a while, it's just like, all right, what's next? It's like I got to compete against something.
So, yeah, for sure. So look, I'm 5'8" and 3/4. I give myself 5'9" just for credit and stuff. So I used to try to do the hurdles and stuff. Hurdles, that was a challenge and stuff. First 3 or 4, got it. Near the end and stuff, man, hey, it was kind of like had to put my age out there and stuff. But remember Animal Olympics and stuff, man. I used to sit there and have the little running, little cheetahs running and all that other stuff. That's how I was trying to get over the hurdle and stuff, man. It was kind of struggle. But I wasn't gonna be that cat to hit that hurdle and stuff and fall. I mean, pride was in the way.
I was watching them cats and hurdles today, and it was like, I was like, y'all making my hips hurt watching how fast y'all getting up and down. I was like, I couldn't imagine trying to jump up, trying to sprint, jump now.
Oh, it's an art form, bro.
I couldn't imagine.
Yeah, it's definitely an art form, man. So we are actually, like I said, Queen Carmel, she's not going to be able to make it tonight. Hopefully she's able to and stuff, but like I said, she had texted us. So you guys won't be able to see the legendary chair and stuff, but you will see the legendary chair next week. So this week, no guests. We're actually just having a little regular conversation. I think it's really important to make sure that even if we don't have guests scheduled for the particular week, we continue to do the podcast. We continue to have the conversations because, the information that we provide, we don't know exactly who may be using it and stuff. So we want to be able to try to connect people to resources. And that's one of the underlying themes for the podcast. And so, Butler with his experience in life insurance, and we're going to talk about some of the lessons learned from last week when we had Krista Smith from Mycovis, commercial lending. We want to kind of talk about that as well. And there was a lot of information that Krista had provided, which was very informational and very useful. So we just want to be able to discuss that. So, and then also we want to, kind of segue that into, life insurance. As you guys know, Butler is not only a resident zoologist, but he's also, he has his business that is a broker as a life insurance broker agent. And so what he does is he specializes in ensuring that people not only have access to life insurance, but also making sure that people have access to business insurance as well. And if you are a business, or it doesn't even matter if you actually have a business or not, you should have some form of insurance coverage to protect not only your current assets, but also making sure that your children and your children's children are able to have some form of, income coming in. So we'll talk about that a little bit later as well. So we're going to go straight into the slides. All right. So we're into the slides. Um, this episode is sponsored by DFG Global. Shout out to you, Butler. Absolutely. So the title of this particular episode is The Next Steps. So we're going to talk about securing life insurance and financial resources. And the topics for this particular podcast include ways to secure generational wealth. We're going to discuss differences in life insurance types, utilization rates for life insurance from cultural perspectives, and we'll also discuss the follow-up discussion from our access to different resources concerning business credit, financial management, etc. And we'll kind of dovetail into some of the information that we got from our last guest, Kristen Smith from iCovis Lending, commercial lending from last week. Our books available. We always want to make sure that, for those who listen to our show, whether it be through YouTube or Spotify, that, it's more than just, watch the video, and it's more than just actually listen to the podcast, but we actually got books that are able to help, build your knowledge base, identify gaps, and, be able to improve your whole entire holistic being. Business credit and financial management. Businesses can be used to help build wealth through credit, income, and tax savings. There are multiple paths towards wealth building. However, businesses have more possibilities. And before I go any further on that, I do want to go ahead and reiterate something that I've been saying throughout the entire time and through the book that I'm currently almost finished on. It doesn't matter if you have a business. It doesn't matter if you have a W-2. It all matters about what are you doing to structure your particular household situation to ensure that they have wealth to be transferred from one generation to another. And so that everybody's not meant to be an entrepreneur. Everybody's not meant to go to college. Not everybody's not meant to have a 9-to-5 job. And so rather than bastardize individuals for doing one thing or another and stuff, you have to understand that there are multiple paths towards wealth building. There are multiple paths towards, accumulating and acquiring wealth. But the difference between a traditional W-2 9-to-5 compared to businesses under most circumstances, a business has more upside compared to a W-2. So where you are trying to get a raise for like maybe 1%, 3%, 5% for a particular job that you're working for, if you operate your business, you have way much more opportunities to boost that double digits and in some situations triple digits. Now, last week we did discuss that 5% of Black businesses have owner's equity. And for those who didn't listen to that particular episode last week, your owner's equity is that you have more assets than liabilities, basically meaning that you have more money in your account compared to how much that you owe. So I know that I personally provide a lot of financial education, financial counseling to several clients, and we talk about what generational wealth is. I actually ask individuals or families are like, okay, so what do you think generational wealth is? Mostly you'll hear that generational wealth is involved with, saying that you have millions and millions of dollars or maybe $750,000 in your checking account or maybe $2 million in your checking or savings account. That's not actually true. The textbook definition of generational wealth is that assets are passed from generation to generation. The common belief is that millions of dollars must be transferred, but that's not true. Because in reality, it can take place in many ways. So you can transfer wealth through property, such as a home, such as real estate, investments, or Airbnb. You can transfer wealth through life insurance, which Mr. Butler's going to talk about. You can transfer wealth through cash, and you can transfer wealth through investments, whether it be Bitcoin, Forex, checking, savings account, money market, bonds, etc. So we're going to talk about also valuing your life's work through life insurance. And one of the research that we was able to find relative to this particular subject indicates that there are cultural differences in the policies because Blacks, the median average, so it's not saying all, but the median average of life insurance for African Americans is $50,000 compared to $150,000 towards whites. The research from a practitioner standpoint, for those who are actually out in the field, and also from academic and government research, says that Blacks tend to be underinsured, meaning that for whatever their perceived value may be, they are getting life insurance policies that's less than what they should be having for their particular family or their particular circumstances. Blacks tend to view life insurance as a means to build wealth due to racial wealth disparity gaps. So the research really shows over time historically that whites have way much more net worth value than African Americans. I think it's off the top of my head, maybe 175 to maybe 5,000, and that number continues to shrink. And so one way is that African American families try to circumvent that particular racial wealth disparity gaps is to be able to purchase a particular life insurance that can kind of help cover the gap. So in the event of their demise, they are able to leave several hundred thousands or even up to $1 million in a particular policy to be able to go to their children or their grandchildren. So that was the presentation. Butler, the floor is yours, sir.
Yes, sir. So first, I want to briefly talk about my company and what we do. So basically, I'm an insurance broker over our main focus. I won't say main focus, but I would just say that we have probably 30 to 40 different carriers in auto, personal auto, business auto, personal homeowners, investment properties, life insurance, business insurance, whether it's general liability, commercial property, workman's compensation, employer's liability. We pretty much have companies that can handle any type of business or any type of situation, whether you have a great driving record, no license, poor driving record. If you're a startup business, if you've been in business for 10 years, our goal is to help you to find the lowest price possible without sacrificing the coverage. Especially looking back at business owners, me being a business owner myself, our bottom line is always try to maximize revenue and cut costs wherever possible. So that's where I try to come in, and I get multiple quotes from multiple companies trying to make that insurance cost as low as possible. Most people do not quote their insurance. They don't, I would say they'll keep it for a long period of time, whether they have a company you might see like State Farm, Allstate, they'll just keep paying and paying without double checking to see are there better rates out there. Sometimes I think it's almost like going to Vegas and actually pulling the lever to see what you get, because 1 month one company have the best rate for you, the next month another company have a best rate for you, because they're always changing things. So it's definitely good to have that financial checkup at least once a year just to see where you stand. Most clients call me at renewal and they end up flip-flopping companies. I might put them with one company this month, another company next month, not month, 1 year, next year, because the rates are better. When I say better, like most people won't change because it's $10 or $15 cheaper. I mean, something that might be maybe a little more impactful on your budget, whether it be $75, $100, $150. It's not uncommon for us to save people $1,500 to $2,000 a year from what they were currently paying. That is not uncommon at all once they go in and check. But going back to what you were saying regarding generational wealth, tell you about a project that me and my family are doing. It's about I would say a consensus of about 7 to 8 of us, and we're establishing a family corporation. So the foundation to the corporation is we are in the process, and again, this is a work in progress. So we're in the process of taking all the older members of the family and getting life insurance policies on them, probably 50 to 75,000, and making the family company the beneficiaries of that policy. And so doing that, the purpose is to have lump sums of money so we don't, as a family, have to go to banks if one of us wants to start a business, if somebody is a little short on college funds and need this, and then we come to a vote, allocate the funds and go that way. One of the best things about life insurance itself is the fact that it's a tax-free vehicle. Now, there's been a lot of talk in Congress. There's a very powerful political pact that constantly fights for life insurance to stay tax-free. There's talks that it won't be tax-free in the next 15 to 20 years because the government's constantly trying to find a way to make more money off people. So I stress to people all the time. Now they'll guarantee current contracts, which are currently tax-free. They won't go back and say, now we're taxing your life insurance. But I do believe that in the future, you're going to see life insurance be taxed. So I definitely try to stress to people, definitely take advantage of the tax-free benefits. So I'll basically talk about the different forms of life insurance. So we'll start off with the most simple one, which is term. Term can go from, you got a 10-year, 20-year, 30-year, some companies have gone out to 40 years. So I kind of equate term insurance to renting a house. So you're getting a set price for 10 years, 20 years, or 30 years, whatever term that you choose. And what people don't realize is how inexpensive term insurance actually is. And if you're not taking advantage of, you really transfer your family. You can insure years for but
So that you go back to thing when I get the forms of options and stuff, this is not gonna be at all. You don't think there's compared to the situation. Say this real quick before you respond. Like, if for the last job I had, I think they offered life insurance for $50,000 for 78 cents, maybe $1.25, $1.25 a paycheck, which is solely inadequate. $50,000 is not going to do anything but make a small little dent to the loans or make a small little dent in the mortgage. So could you please explain to the audience why they should consider examining secondary markets such as yourself compared to what the employer is offering?
Absolutely. Most employers offer life insurance as a benefit for pennies on the dollar. Definitely take advantage of it while you're there. But more than likely, whatever they're offering isn't going to be enough. I think we, especially as Blacks, we hear that we have life insurance and we're good. We don't actually go through the process of sitting down and saying, how much life insurance do me and my family actually need? So when you're thinking about how much life insurance your family needs, you need to think about a minimum of 5 to 10 times your income, first of all, because life insurance isn't burial insurance. A lot of people get that I just want enough to bury me, enough to put me in the ground, so my family doesn't have to pay GoFundMe, have a bake sale, fish fry, whatever when I die. That is the bare minimum. You want to be in a position to where your family is replacing the income that you were producing. So for at least a 5 to 10 year period to give yourself time to adjust to the new financial norm. Because if somebody income passes, not only are you dealing with grief, you're dealing with having to recalibrate everything financially because you've lost a complete stream of income. You've lost income, you've lost possibly health insurance on one side, you possibly lost the ability to send your kids to whatever school they were going to, whatever activities they were doing. If you were a 2-income family, car notes, different things like that, mortgage. So
they know kind of into I got to pay $500 a month. So, would you mind commenting about that misperception?
Right, yeah, because there's a huge misconception on, got to excuse the clock if you can hear it, about how much life insurance costs. If you are fairly healthy, like when I say fairly healthy, you might have a blood pressure med, you might not be perfect height and weight. That's the kind of numbers I was trying to use. And the reason I just used $1 million is just, I use it for shock value from the standpoint of to show you just how inexpensive it is. Like $78, that's cheaper than a cell phone bill. That's cheaper than taking the whole family out for a dinner one night. Even if you go into Applebee's, if you got a family of 5, y'all eating, tip, you're gonna be around that $65, $70 range. So a lot of people spend that money daily and don't really realize it when they can really be setting their family up for the future. Now, even in being in the industry, I'm always shocked at how inexpensive life insurance is. And when I dug deeper into it, I actually found out that the reason that these companies are able to offer life insurance so cheap is because out of all the term policies in the United States, I believe this is, last time I looked at this stat, it was about 5 years ago. So it probably hasn't fluctuated too much since then, that only 4% of all term policies actually pay out. And the reason for that is people either stop paying them, they let them, they go past their term and they don't continue them. So companies are only paying out 4% of all term policies due to the fact people are not keeping the policies up. Now, I think is as an absolutely fascinating stat. So that's why they're saying, hey, we're gonna, you give me $80, I'll say I'll pay you $1 million, because there's only a 4% chance I'm gonna actually have to pay you this money. Did a $500,000 policy on a 45-year-old, less than $100 a month. Same thing. So term policies are good they're great for families. Term policies are great for families when you have your children being younger, they're involved in activities, they haven't gone to school yet, where they're really depending on your income at that point, which is why you have the 10, 20, 30-year term. So the reason people have different terms is, hey, let's say my kids are like 16, 17, between 14, 18 years old. I might only want a 10-year term to cover me until they're able to be out on their own. So I don't need that much life insurance anymore because they're more established. 20-year term when they're a little bit younger and younger going forward. The great thing about these policies is all of them, all the companies right now, they also are automatically convertible to permanent insurance. Now, the permanent insurance is where you're getting into the whole life and you're getting into the index universal life. Now, the whole life is something that you can say, I have to pay this premium for my whole life. Now, it's about 4 times more expensive than a term policy because people are going to keep those longer, and they also build cash value. Average is about 3 to 4% clip. I would never, I'm on the fence of telling people to get whole life policies other than burial policies, just because the rate of return isn't that great. I think you can take, I look at the Dave Ramsey thinking, get the term and you can invest that money in something else that's going to grow.
And Dave Ramsey, a very good book to get that information from too.
Right, absolutely. Now they've created another policy called an indexed universal life policy, which is kind of a hybrid between whole life and term. So the indexed universal life policy, you can actually take advantage of market gains now. And the cool part about these policies is you can participate in the market gains, but you won't lose any money in the loss. When the market dives, you won't lose any of your cash value. Now, the market may make 20%, you might get capped at about 10. Market dives, you don't lose any of your cash value. Now, there's an awesome retirement trick to index universal life policies. Now, these universal life policies, they're actually being used as retirement tools because you can actually set yourself up to where you're getting tax-free retirement income for the rest of your life. So these policies are structured to where you can dump large sums of money into this cash value and it grows tax-free. And when you pull it out, you're not paying taxes like you would a Roth IRA, regular IRA, or a 401k. I would definitely suggest that anyone who's in the process of retirement planning, definitely you want to have about 40 or 60% of your assets in an IUL because you want to take advantage of the tax free.
IUL again, bro?
What'd you say?
Can you explain what the IUL is again for those who may not know?
IUL again is an index universal life policy. So again, it's a regular life insurance policy, but the cash value part is not a fixed rate like the whole life is. You can actually take advantage of market gains. You can link it to the S&P 500 or another financial, I forgot what another one of the markets is. You can do the Dow, you can do the S&P 500. I forgot what the other one is you can do, but that's either here or there. But you can say, let's take the S&P 500 for example. Let's say the S&P 500 does 20%. You might get capped out at 10, okay? But this year, the S&P 500 is in the negative. You don't lose any of your cash value. So what people are doing is they are dumping large sums of money into these IULs. Now, the government has put a cap on how much you can put in. You can't like put all of your assets in, but there is a formula called, it's like a 7-pay formula where depending how much life insurance you have, you can also have a somewhere equivalent amount of cash value in. And the cool part about it is versus a Roth or an IRA to where you are limited each year at how much you can put in. Let's say, I think Roth might be like 5,100 or something like that you can put in every year. Let's say you have a Roth and you can't put all that money in every year because of whatever else is coming up in your life. So you have the same thing with IUL, but now you have a windfall where you get like $25,000. You can now put that whole 25 in an IUL where you can't put that whole 25 to catch up in a Roth. So you can now get the tax deferral and you also can pull the money out tax-free. Now, the difference is when you got the Roth, regular IRA, and you got the 401k, when you get ready to take your distributions, they're now taxed. So only key is you don't know what that tax rate is going to be when you're ready to pull that money out. Government could decide to double the tax rate in 10 years, 15 years, when you're ready to start taking your retirement income. And now you set yourself up where you're getting a huge deficit. So when you could have been putting this money in IUL, now you're not having to pay taxes on that money you're pulling out. Because basically the government basically has their budget set up on everyone's retirement account. They know when you have to pull it out and they know what the tax rate is at that time. They set their budgets to the 401k, IRAs, the Roth IRAs. They know at whatever time it is, okay, he has to take or she has to take this minimum distribution. We're gonna have this much tax revenue at that time minimum. So that's a great way to avoid that unknown tax situation in the future. using the IUL as a retirement income as well, retirement vehicle as well.
Gotcha. There's definitely some great information to know, because of the fact that it's, it's almost, I'm not going to really try to compare life insurance to car insurance, but there are different types of car insurance, there's different type of coverage types available, as well as business insurance, health insurance, et cetera. And I just think that, when I do talk to other Black people in different industries and that are currently working or actually even freelancing and have their own business, they don't really understand, the difference of life insurance that's available and, different options. And some of those options are not that much of a difference financially from one criteria to another. So being able to have a conversation about life insurance is very important, and continuing to have that conversation is very important. Because we do try to, again, like I say over and over again, try to connect the resources to the people. So I know that we talked about different utilization rates of life insurance from cultural perspectives. And, when we were working on this particular slides for this episode, one of the things that Butler had pointed out in his research is that the large disparity from Blacks and whites. And so, Butler, what do you feel? I don't know the type of clientele that you have, and if you don't want to talk about it, that's fine. But if you were talking to white clients or clients of ethnic groups and stuff, what do you see as the biggest disparities as far as the questions that may have been asked? And then also, their goals when it talks about selecting life insurance.
What I've seen is basically, I will say Blacks don't, and this is a generalization. There's always outliers. As a whole, sometimes we fail to see beyond today. Like, we just want to make sure we're okay today, and we're not really planning for 5 years, 10 years, 20 years. I think our generation, Doc, is a lot better than our parents were as far as
I agree.
Planning. So we're definitely, what I'm saying is we're definitely getting better, but not at a rapid enough rate. Just because of so much uncertainty in this world, because you never know day to day what's going to happen to you, even more so than back then. So I see that we need to have like we're having this conversation now, to where we're not always starting over from ground zero. That's not a badge of honor to say we start off from the bottom, now we're here.
Sure.
Let's say we started from 500,000, now we're here. I want to change that mentality. Now, majority of our peers, we started from zero pretty much. Well, I would say we amassed and done what we've done professionally, but the majority of us did not have lump sums of money to do that with. Now, I think it's upon us to set a new standard, to where our children are not singing what Drake was singing. We started from the bottom, now we're here. They're saying, we were set up to where I don't have to go to the bank for a car loan. I don't have to go to the bank for a house loan. I don't have to go to the bank for a business loan. Those funds and those assets are already in our family, so I don't have to start from the bottom. I'm starting from a place of not a deficit, but a surplus. And that affords me to make a couple of mistakes, to where if I do make a mistake financially, I can kind of pull myself from it, to where some mistakes we might make might put us in a bigger hole. They can take bigger risk. So just trying to change the standard of what we expect for ourselves, what we expect from our families, I think is important. That's where we have to catch up as a people. Standard.
Absolutely. And one thing to kind of keep in mind too is that it's not about how much that you have, how many zeros are being transferred to your children or your grandchildren or nieces and nephews or whatever. I mean, it's the process of transferring something. One of the things that we have done so far throughout these 23 episodes, this is the 23rd episode, is to underscore the fact that, for everything that you see in social media, which could be a little bit of hyperbole, a little bit of stunning, a little bit of, fake the funk, the reality is stuff that there are a lot of Black Americans that are hurting. And, we do understand the difficulty of securing capital, funding for a home mortgage, for starting a business or whatever the case may be. Just to be able to leave something behind, you have to understand that you create a foundation. Somebody has to create a foundation. Now, in the past, we've actually had, back in the day, it used to be always about property, ownership, because of the fact that when they was growing up, they were slaves or they were, second generation removed from being a slave. And so, the value of owning land was very important. I know that this world has changed a lot over the last 20, 30 years and stuff, but we should be able to own something. And if you can't afford a home, if you cannot, own multiple properties or real estate, despite the push that some people make for it, at the very least, for what's on average, about maybe $50, maybe for a 30-year-old butler.
Or how much?
Maybe $500,000. We'll say $500,000.
Yeah.
I mean, think about it, y'all. If you were
I would change a generation for years.
Go ahead. Yeah, right. Okay, so let's do it like that. So let's say that you're 30, 32 years old, 35 years old, you got 2 kids, whatever. Your credit score is not doing that well. You can still own a policy for $500,000 where anything happens to you, your descendants has $500,000 tax free. And we talked about some of the shootings and stuff involving with the police and Black people, whether it's justified or not, it's irrelevant. We talk about the quote unquote black on black crime and some of the other things that goes on. Whether it's true as the way they say it is, it's not irrelevant. At some point in time, we're all going to die. And so the question is, how are we going to be able to protect ourselves or protect our family by making sure that they have what they need? So like Butler said, we stay away from fish plates and the fundraisers and the GoFundMe's and things like that. Like that should be priority number one, regardless of your situation. It's something that we're really trying to underscore. And, like I said, I personally have a policy with Butler. And I've had a policy with him for 1.5 years. I probably need to up my coverage, but my circumstances are different from everybody else. But the thing is, it's still very important that if anything happens, I know that there will be no debts to be transferred over and that there will be some money for her and as well as the kids. Now, my goal is to try to build another level upon that. And if it happens, great. But at the very least, I was a foundation. This is what Butler is definitely trying to talk about. Butler, what do you think are some of the biggest challenges mentally for those who don't have adequate life insurance to take that next step? And what would you tell them to help them get over the hump? And we're probably about 10 minutes left on the show so far.
Okay. To get over the hump, first thing you want to do is just ask questions. You want to see what is possible. Let's say you are someone who is on a limited budget, and you're like, I just don't see in my current situation where I can actually afford much more than, because I'm already stretched out, whatever. So one of the things I like to do too is I like to sit down and go over your auto insurance, your home insurance, to be sure you're paying the least amount possible. And I always tell people, if we can find a way to save you some money and we have a life insurance deficit here, let's take that money and let's say you might need the extra $25, or let's say I'm saving you $50 a month total. And you'll say, well, I can really use extra 25 for whatever. Well, let's take 25. You might only be able to get $100,000 policy. $100,000 policy might pay off your mortgage. It might pay off your car. It might pay off student loans. It might set up a college fund. That $100,000 tax-free, that could change a generation. So I try to tell myself daily, I try to say, look, you can literally change a family's financial future for generations to come, whether it be 100,000, 50,000, 250. So start just by asking questions and finding out what's possible. Once you actually ask questions and see what's possible, then we can work on a game plan. I think most people stop themselves in their mind mentally before they even get to the point of what's seeing what's possible. They'll say, well, I can't afford that. Well, I can't afford that. And they just stop themselves before they even do any investigation. Even after we talk, you might say, I just can't do anything right now. That may change in 30, 60 days, but at least you have the information to where you can make an informed decision, if not now and in the future. So I would say the first thing I would do is just have the conversation, get the information, and then make an informed decision from there. As far as having a mental block goes.
Absolutely. Well, that's feedback on the one. So just, one of the other bullet points that we have on this particular podcast slide, we had talked about, lessons learned from, when we had Krista Smith with My Focus Commercial Lending. One of the things that we did want to talk about is the importance of maintaining, or trying to secure business credit, understanding your personal financial credit situation, and, also doing what you can to make sure that you have the protection for your business, because a lot of people start a business and they don't have adequate protection. And it just takes one person. You can have an LLC to the days long, but if you don't have proper insurance, it doesn't matter if you have an LLC or a sole prop or a partnership and stuff. You're exposed. There are loopholes to this, and it's not as simple as saying, oh, okay, well, I have an LLC, I'm protected, I can do whatever. No, there are certain things and stuff, and people have lost millions of dollars, billions of dollars over the course of decades, because it wasn't adequately protected. So, Butler, as we about to wrap this up, what do you feel is important and stuff when you're trying to coach, aspiring Black businesses or even existing Black businesses to ensure that they have appropriate business credit?
Well, depending on the business that you decide to go in, I know once you decide to take the leap as an entrepreneur, you're excited, you're scared, a lot of different emotions running through you. You're saying, can I still support my family? A lot of different emotions. So we have to do our homework at the same time to be sure we're protected. And going back to what you were saying regarding as far as a liability and things like that, for most businesses, liability insurance is pretty inexpensive also. Most startups, if you're doing something like an office, if you're working out of office, or you're selling clothes or something that it doesn't have a lot of risk, you can get a liability insurance policy for $25, $30 sometimes. If you do more things like you're a contractor and things like that, it's a little more expensive, maybe 50, 60. But speaking on what we were speaking on last week with the business credit, listening to her, I did some research, and just as far as, okay, that's one thing we don't think about when we start a business. We have our personal credit, and we try to use our personal credit to fund our business, which is what I did, because I didn't know anything about business credit when I first got started. So like some of the things I've learned recently, I wish I'd known back then, to where I can kind of separate my personal from my business. So real quick, I want to run off. I was in this Facebook group that teaches how to actually establish business credit. And some of the success stories I've heard are crazy. Like, they are they're purchasing land, they're purchasing vehicles, and they may have been only in business 6 to 8 months, only using their business name. They're not, there's no personal guarantee. They're not running their social security numbers or anything. They're strictly going off of their business credit. So I'm gonna run off a couple of steps that you can use to begin to establish business credit. First, you want to get your EIN from the IRS website is the first thing you want to do. Next thing you want to do, you want to go ahead and get incorporated, whether you want to go C Corp, S Corp, LLC. Do a little research to find out which type of structure is best for you. Or if you want to do the sole proprietorship, that's completely up to you as well. Third, you want to open up a business bank account. Even if you don't have any current revenue, at least get the business bank account open with $25, $50 with your EIN, with your LLC, with even being a sole proprietor, so you can still show a separation of funds. Next thing you want to do is go to Dun & Bradstreet and get a Dun & Bradstreet's number, because you cannot get business credit without having this number. And I'll get with Doc, and we'll put a lot of this information on our website, so you can go back and look and see some of these tips that I'm giving you here. Normally that now that DNB number to get is taking up to about 4 weeks. So definitely be patient, but continue to do your due diligence. There's a site called nav.com to where they'll personally monitor your business credit, so you can see what accounts you have that's separate from your personal. That's another fee you may have to pay. Just so you can see how it's starting to be established and things like that, so you can kind of monitor it like you would a Credit Karma or the freecreditscore.com sites that they have for your personal credit. Next, you want to definitely get a business website, even if you have to go to Wix, GoDaddy. It doesn't have to be anything elaborate, but you want to make sure you have your domain, have a site to where people can see you are an actual business. Next, you want to get a toll-free or fax number, separate from your cell phone. You don't want to have your cell phone being your business line, because creditors want to see that, again, there's separation from personal and business. Next, you want to list your business with a couple of sites online. There's listyourself.net, there's Google, there's Yelp.com, Facebook, Instagram. They want to see that you're actually active and doing business. Next, there are smaller companies you can start to establish business credit with if they'll work with startups. One is Uline, one is Granger, one is Quill. Go in there and just purchase something. Go in there and purchase, pay it off, start establishing that thing. And then you'll start seeing what's called a paydex score. So once your paydex score starts getting higher and higher, and that's how you can start to get this business credit going. And you have to have at least 5 accounts to get that paydex score. Paydex is similar to TransUnion, Experian, Equifax, what we're used to seeing on our personal credit. So those are a couple of quick steps. Hope you were taking notes. Heard quote recently, note takers are money makers. So hope you can rewind and take notes and just use that as a starting point to start getting your business credit right. And then it'll be a lot easier for you to function in your business and growing your business that way. And then speaking on, it was Krista, right?
Yeah, Krista.
Yeah, Krista that we spoke to last week. If you go in their business like hers, more established, the conversation's easier. The paperwork's easier. You open up to more funding, you open up to more lenders, so they can actually see a pattern of you being a legitimate business.
Did have a quick question real quick on Facebook, and somebody had asked, as far as UIL is concerned and stuff, how often are you able to pull the money out?
It's absolutely liquid. You can get that money probably within 24 to 48 hours. That's another benefit of the IUL. The money is very liquid. Like you could, let's say when you're paying your normal premiums, you're still building cash value. But let's say you got a little windfall of 5,000, 10,000. You say, I don't need it right now. Let me go ahead and put some of it in the IUL. If you say, hey, I might need to get 2,000 the next day, something came up, you can hop right back in and get it out with no penalties.
Mm-hmm. So, and when you get to a situation like that, I don't want to make people, there's obviously some risk in doing that particular decision, and you have to know your tax implications. And one thing I do want to stress that, majority of the, recommendations and some of the conversations that were provided and stuff, you definitely still need to consult with your tax attorney and your agent or financial advisor. So I don't want you to feel like that, okay, well, on the Mahogany Thoughts podcast, I said I could, get a $2 million policy and I'm just take as much money as I want. So you need to make sure that you are speaking with the experts so they can kind of explain how that affects your personal situation. But one of the biggest things, regardless of, the type of the policy that you have, I guess my thoughts are, for what Butler is saying is that it's not so much of what's the best policy. Do you have a policy? I think that's so important to underscore, because it's like you could talk about starting a business, you could talk about building a brand new house, you could talk about getting swimming pools, you could talk about traveling the country and this and that. Something can happen, over the last 12, 15 months. A lot of people have lost their lives to COVID, and if it's not going to be COVID, it's going to be something else, unfortunately, and stuff. So, tomorrow's not guaranteed. So you have to ask yourself, how are you protecting your future generations for tomorrow? And, when we're talking about for some of the information that Mrs. Smith had talked about from my COVID lending, business credit is obviously desirable, right? But, by the end of the day, it still goes back to how are you protecting your family? How are you protecting your business, your assets, your legacy?
Absolutely. Like I tell people all the time, like what I do, I'm basically the person you come to. What do I do if this happens?
Absolutely.
What if I get in a car accident? What if I get hurt at work? What if a family member dies suddenly? That's where my job comes in. I help you kind of navigate the unforeseen things that's going to happen. Because one thing I can guarantee you is something unexpected is going to happen in your life that you were not quite prepared for. But we can do our best to kind of navigate through the things that we assume what might happen. Like you might get in a car accident. There might be an unforeseen death. You might have an injury you weren't ready to sustain, which stops you from working. So what are we going to do to navigate through those situations so you're not so caught off guard when life interrupts your life, if that makes any sense?
No, it makes a lot of sense. It makes a lot of sense and stuff because, the thing is that we don't want to come into a situation where we're all knowing and we're just passing it along and stuff. There are people who really want to get this information and we really want to be able to put this information in their hands so they can make an informed decision. Because the reality is, Butler, is that, a lot of people don't understand what a broker is. And we talked about that last week. A lot of people don't understand how to do their benefits administration while they're at the job. And, they're not really making the best informed decisions because they don't have the information available for them to make such decisions. So all we can do, as not only the host of this particular podcast, but actually as, people who are very socially conscious of the best interests of the community, is to ensure that they have as much information as possible before moving forward. And even if we can't answer all their questions tonight, at least they know that they can reach out to you to do that. So before we sign off, one last plug. You want to plug your business and stuff, man? What's the best way for people to reach out to you if they have any questions?
I can be reached, my office number, which is 618-589-2111, or my website, www.d as in dog, F as in Frank, globalinsurance.com. Or you can reach me on Facebook through Terry Butler, or you can reach me on Instagram. I got to get an Instagram business page.
Me too.
Zoologist too. I can be reached.
World-renowned zoologist.
Yes, sir. I'm in process. I'm gonna give me a couple of animal tat. You want your family knowing that worst case scenario, we're good. We're gonna live on. You do not want your family to have to be grieving you while still having now to make decisions they wouldn't normally have to make because your income is gone. Like I'll speak especially to men. You don't want your spouse having to get 2-3 jobs now because you didn't take the responsibility of planning to be at least sure they're good for the next 5 to 10 years so they can get over the financial burden of you not being in it anymore. Your leadership is gone, your presence is gone, your money's gone. So they're having to deal with all these different things. Don't add financial burden to that when you don't have to. You can make an informed decision immediately. And last thing I want to do is quickly talk about how simple it is to get life insurance. You can get up to, now companies are saying you can get up to $1 million life insurance with no medical testing. You can get up to, I would say $500,000, and you can get an instant decision. They can let you know that same day. So a lot of companies are getting away from doing blood, urine. There's still some cases where you have to, or if you have a kind of a complicated medical history where they want to check and be sure things are good. But if you are fairly healthy, you can get almost instant decisions on these things. So definitely review your current life coverage, review your debts, be sure your debts are paid off, be sure you got about 5 to 10 years of income put away so your family isn't in scramble mode and survival mode when you're gone.
Absolutely. So definitely check my man out. The zoologist is going to get that. We say you're going to get a lion, and what else?
Lion, wolf. I think I'm gonna get like a moon on my shoulder with a lion howling. I think I'm kind of toggling between two different images.
Sound like some Game of Thrones action going on.
I got halfway through Game of Thrones. I got to finish it. I got through about 3 seasons. I never finished Game of Thrones.
Man, I watched that joint twice and stuff, man. I still think it's one of the best shows written.
Oh yeah, I was stuck. I think I'd stopped with I remember the dragons and the chick with the dragon lady where she had control of the dragons and whatnot. I don't think I went past that, but I definitely want to see it.
Yeah, so I mean, you've been to my crib and stuff, man. So I like to crank that surround sound up. So I think I'm gonna watch it all from the beginning, just so I can just blast the hell out of that theater room and stuff. So, you know.
Yeah, I got so much. I got to catch up on The Wire. I got to catch up on Snowfall. I got so much to catch up on.
Just finished watching Snowfall. I'm caught up. Definitely need to check it out. The Wire. I'm just disappointed that you haven't seen the whole entire. The Wire is cold.
After 2 seasons of The Wire,
you still need, but you still need to see Boardwalk Empire, Ray Donovan, Billions. I do want to see. I haven't seen. I heard Bridgerton was good. Queen's Gambit was good. There's still. I mean, there's so many shows nowadays and stuff, man. But I'm gonna try to get to them through the summer. You know, because for those who have been following us for a while and stuff, I mean, we got a couple more episodes left, and then we're taking a nice little break for a couple of months before we get back in, to the podcast again and stuff. So, whereas we're doing these podcasts on Tuesdays, I had to rush back. You had to rush to get on and stuff. Definitely looking forward to just binging instead of, sometimes podcasting. Sometimes you got to take a mental health break, for yourself, right? So, anyways, that's it for tonight. Next week, we're gonna actually have Giovanna May. She's actually the director of Illinois SIU's Small Business Development Council. She's housed out of Edwardsville, Illinois, and she's going to actually talk about starting a business in the state of Illinois, filing for your LLCs, general questions that she has encountered, involving with people who are trying to start up a business, or even for those who might be kind of stuck or where they're at right now. So we'll also even try to dovetail into government contracting. So that's going to be next week on Tuesday. I think it's May the 3rd. I don't have the calendar in front of me, but that'll be around 7:15 or 7 o'clock. And it'll be from 7 o'clock to 8 o'clock. So hopefully you guys are able to join in. And then after that, Carmel will have a episode dealing with nutrition and nutrition and wellness. And then after that, we'll have a wrap up, and then we're done. We'll actually have Mr. Butler, 26 episodes, 26, 27
Wow.
episodes in the book.
Getting old, my dude.
Yeah, man. So it's crazy because we started off in March.
Best before our eyes.
Yeah, so it's funny because we started out in late March. So if you think about it from a calendar perspective, I mean, we damn near hit half the year of podcasting, and we probably have almost 40 to 50 hours worth of commentary. Kind of reiterate what you said in the past and stuff. You just keep doing this, you continue to build it. Some of our podcasts are going to be very entertaining. Some of our podcasts is just going to be very informative. Some of our podcasts is going to be educational. Some of our podcasts is going to touch on some old pains and some hard truths. But, the thing is one thing that I tell people that I see out and about when they say, "Oh, I heard you got a podcast, what's it about?" I say that I speak our Black truths,
Absolutely.
I don't see too many, shows, outlets and stuff where we get a chance to voice our opinions on a regular basis. Even though we may touch on current topics, we try to bring so much more because we realized, Butler and I had realized when we first started this up, there was nothing out there available. And I know that more people are podcasting now, and for those who are even more successful than what we're doing, salute, happy for you and everything like that. But by the end of the day and stuff, if we don't use our voices to try to educate and inform, then we are more likely to repeat some of the challenges that we have experienced growing up ourselves. So thank you again, as always, for listening. We are on Spotify, Mahogany Thoughts, YouTube, Dr. Terrence Duncan. We will have a website. The website should be coming out probably by the end of June, early July at worst, but more likely June. And we'll definitely start having some workshops in the second half of the year too, so we can start getting more people involved and engaged. Butler, any last words?
No last words. Like I said, I'm excited about the journey going forward. Definitely love being a part of this project, and just looking forward to doing bigger and greater things locally, nationally, once we open back up, being on location in a few places, getting a little more adventurous as COVID lets us.
Absolutely.
Exploring new guests, new locations, those kind of things, new topics. I'm excited. So, as Jeezy said, all gas, no brakes.
All gas, no brakes. We got to figure out how to get a sample on there without violating copyrights, because I did that song before. When you sent it to me and stuff, I love that track. I actually heard that track several times before. American Dream is still one of my favorites from Jeezy over the last 5 years. With
I do the American Dream too. Yeah, that's my joint.
Yeah, with J. Cole and K. Dot. So I mean, somehow we'll figure it out. So maybe in season 4, episode 27. But anyways, this is it for tonight. Like I said, Queen Carmel, she was not able to make it with us tonight and stuff because she had a family obligation. So definitely miss you, Queen. Hopefully you're listening in, tuning in, whether it be today or later on. We definitely look forward to getting you back on the show with your legendary chair. And
absolutely,
the chair is amazing, man. I'm about to give me a throne. So anyways, Dr. Duncan, T. Butler, April 27th. Hope y'all have a good rest of the week. We out.
Peace.